Hey guys, welcome back to another YouTube video here. I'm going to show you an amazing strategy using the LiquidityMagic indicator that has guaranteed me literally a 78% win rate when it comes to trading. And I'm going to show you everything step by step, how to use this, how to implement this, how to literally apply this in your trading so that you could go ahead and do the same. This strategy is absolutely amazing with this indicator. This indicator right here is called LiquidityMagic by Ryland Trades. This is by me. With this indicator, this basically marks out liquidity zones in the market. As you guys can see, we have this red liquidity zone and we have these green ones here. So price is always attracted to these areas and act as like a liquidity pool in these areas. So price likes to retrace from these and reject off of these, or just simply be attracted to these, right? And use these areas as a sweep of liquidity. This indicator is fabulous because if you hover over the zone, you can go ahead and see if you're bullish or bearish instantly on each time frame. As you guys can see, also does break of structures and change of characters. And then it has 3 signal types. So spectacular stuff here, great stuff. You could always adjust the signals with the take profit, shows you your previous sessions. And for futures people, it also shows you SMTs on the lower time frames, which is spectacular. But with that being said, let's go ahead and run down with the strategy. If you guys want access to the indicator, it's going to be down on the link in the description. So the first step when it comes to the strategy, we're going to go ahead and look at 9:30 to 10 o'clock open, and we're going to mark this out here. So 9:30 to 10 o'clock right here. What did price do? Well, we're currently in a downtrend. Price could continue that downtrend right here. We created a low and we kind of retraced from that. So here's a checklist right here, just so you guys get a sneak peek. So we're looking for a bullish or bearish market from 9:30 to 10 o'clock. And as you guys could see, price ended up going down. I'm gonna look for shorts only. Now, we're going to wait for a change of character or a break of structure. In this example, what do we have? We have a change of character. Will this change of character work? No, because it's a bullish change of character. We're looking for a change of character or a break of structure that is along with the trend, right? So in this case, since we went down, we made a bearish change of character. So basically now we're going to wait for the price to manipulate. Since we made the change of character, what do we have? We have a fair value gap or liquidity sweep as manipulation. So right here, we have a fair value gap right in this area. This high right here, we could see 2 things. We could see price coming up, manipulating to this fair value gap, continuing lower in the market. Or we could see price coming up, taking out this high, then continuing down in the market. What I like to go ahead and do is wait to that. So we're going to fast forward. Price ends up coming to a fair value gap. So now since we see that rejection off that gap, I'm going to go ahead and take a position here. And I'm going to have my stops at this swing high. Since we're already rejecting off of this fair value gap, we're going to go ahead and look for take profits. And as you guys can see, this take profit wouldn't make sense. This is like a 0.8 reward. We want to make sure we lower this. So that right there would be about a 1-on-1. Okay, and then we could also target other liquidity. So if we look here, we have this low. So we could even target this area here. Just like that. So this would be our trade. What do we have? At 9:30 to 10 o'clock, we had price going lower, and then price confirmed going lower because we had a change of character, and then we had manipulation to a fair value gap or a swing high. In this case, it's a fair value gap. Then we saw that slight rejection. What do we see? We end up confirming a break of structure. The indicator does this automatically. Okay, so now we know we're going to probably hit our TP. Just like that. So what's actually crazy, guys, check this out. Let me turn the zones back on. Now watch this. What happened? After making that change of character, confirming bearish price action, price ended up coming up to this liquidity zone inside this fair value gap as our manipulation, continuing lower to a liquidity zone down below. Absolutely amazing. Look at that. All right, so in this example right here, let's go ahead and do this. So 9:30 a.m. open was right here. As you guys can see, the indicator automatically marks out the session. We could go ahead and see right here at 9:30, we came down, must have manipulated to the lower side, and then continued up. So from 9:30 to 10 o'clock, what did price do? It ended up going up. I'm going to look for continuations only. What would that be? Longs. So after 10 o'clock, we got to look for a change of character or break of structure. Does this count? Well, no, because it's in 9:52 or 9:53. There you go. So it's inside our New York open time frame. We want to make sure we wait till 10 o'clock. 10 o'clock is right here. Now we want to go ahead and see a break of structure or change in character now. Let's go and see what price does. So we ended up making another break of structure. In this case, it's after 10 o'clock, so this one is valid. Now, what are we likely to see? Manipulation. What's our manipulation? A fair value gap or liquidity sweep. We have this liquidity small little low right here. We also have these lows. So price could come down and sweep these out. However, if we go ahead and look, what do we have? We have a fair value gap being respected right here. Now, since this fair value gap is being respected, I'll go ahead and take an entry right here. Stops at a low. Technically, this would be the low since this is the wick, okay? And then what I would like to do, since we're at all-time highs here in this example, what I like to do is use standard deviation. If you guys don't know what standard deviation is as TP, watch this. So I have my Fibonacci tool and I have these settings. Go ahead and copy these right here. This is basically going to go ahead and identify where our take profits should go. I'm going to go ahead and measure the manipulation. So after the break of structure, this candle right here came down. We're going to measure this candle. So Fibonacci, I'm just going to measure the low to the high. Just like that. Okay. What do we see? Well, our entry is right here. We're going to use this as our take profit point. So -1 is first. I'm going to go ahead and adjust my stops accordingly, just like this. And let's see what happens. So let's just say we're entered this trade right now. Stops right here, targeting a 1-to-1 risk reward about. Let's see what happens. So I'm going to go ahead and remove this. You know, if you don't want to use this method of measuring the manipulation leg, in this case, we only have one candle, but usually sometimes it's 2 or 3 or maybe 4 candles. You guys could also, if you guys don't want to measure this right here, you could also trail your stops. So meaning you just, you know, have no take profit, but have a stop loss and just trail your stops up, right? Or you could take off contracts like 1 by 1 as price moves up. So I like to go ahead and measure it out with my Fibonacci tool to get the exact take profit points using standard deviation. What do we see? Price continues a trend up. This is all I'm looking for. We're looking for a trending market. We're looking for developing a bullish or bearish bias, specific time zone here, and then the change of character or break of structure. In this case, we had the break of structure. Then we had a wait for manipulation. We already had price come down inside this fair value gap. This was our manipulation, which we saw a rejection. That's our entry. Bang, right there. Okay, continuing the trend. What happens after price does that? We keep going up. So you could always trail your stops, or you could always have take profit points that are higher. In this example, if I measured this manipulation right here, we ended up hitting our take -2 point and then our -2.5, pretty perfect. And then we hit up our third take profit. So let me go ahead and show you guys another example here. This one will be a little bit more tricky. However, I'm still going to make this so simple with you guys. Okay. So at 9:30, we actually had price being really choppy. We ended up seeing, a new high being made in this area. So from 9:30 a.m. to 10 o'clock, we ended up, it looks like we went up. However, when you see choppy price action like this, you're either not going to trade or you're going to simply wait to see more candles. So in this case, we're just going to wait to see more candles. Well, it looks like we went more bearish than bullish after all, right? Because we waited for more candles to identify the trend of the overall market. Since we got that, we're going to go ahead and wait for a change of character or break of structure. In this case, we have a bearish market because price ended up going lower after a choppy market. All right, does that make sense? So now let's see if we go ahead and make a change of character. In this case, this is bullish. This is for a bullish change of character, so we're not looking for longs. We're looking for shorts. Let's go and wait to see what price does. And we actually do make one right here. Now, we're going to wait for manipulation, a fair value gap, or liquidity sweep. Do we have a fair value gap? We did not have a fair value gap inside here, right? We are going to go ahead and wait for a high to be taken out. In this case, we have a high here, and then we also have a high here. Let's go ahead and see if we could actually manipulate first before taking a position. And there we go. So we ended up having liquidity sweep right here. Now, since we hit one of these liquidities, but not the top one. However, I'm still going to take a position because we are rejecting off of that liquidity, just like this. So our stops, I'm going to put mine slightly above the liquidity sweep here, or the second liquidity. And then we're simply just going to go ahead and target a low, or we could use standard deviation if you guys want to use standard deviation again. So we're going to go ahead and measure the manipulation candle. So what was it that manipulated? Well, we had this right here. So this is the wrong way. So what I want to do is measure it from the high to low this time. This will be our take profit points. Now, -1, our first take profit. We have -2 as our second, and we have -3 all the way down here. Okay. I'm going to go ahead and stick with these liquidity points right here as our take profit, since we do have some liquidity points here. We ended up coming down, coming back up, right? Take profit 1 hit, take profit 2 hit, and that's it. Bang. So we have 2 hit profits, it looks like. So I would have probably went break even as soon as we saw this being hit, but I would have took off a contract, right? So in this circumstance, you would have take off contracts as you guys hit liquidity. Does that make sense? With that being said, you guys, that is going to be it for this video. I'm going to have more examples in my Discord as well, so go ahead and join the Discord down below. Indicator access is down below as well. So go ahead and get access to those 2 things right there. And also, once you get access to the indicator, you get access to the VIP Discord immediately. I hope you guys learned a lot with this. Start using this in the market. You guys are going to see great results. With that being said, backtest, practice beforehand. With that being said, you guys, take care, peace, trade on.